So it's been a long time since we were together in Morocco 4 years ago. It's great to be back at WFC and to see so many old friends, and hopefully we'll make some new friends over the next couple of days. But in putting together this panel, I've been thinking about, those last 4 or 5 years and what's happened, and what we've all been through, both as an industry and, even personally. And I don't want to frighten anybody, but I kind of went through and had a look at all the different things that we've faced in those last 5 years or so. And I put together a list, and I'm going to read it to you. So don't worry, we've been through all of this, but obviously there are still elements which are ongoing, which we all know about. So Brexit, the rise of populist politicians and the polarization of political and cultural discourse, the re-emergence of nationalism and extremism, and the slowing of globalization, the COVID-19 pandemic, our obvious one, supply chain risks, the effects of climate change, the increase in extreme weather events. We've had an oil price crash. Now we've got an energy price spike. Obviously, the war in Ukraine, Sudan, Yemen, Syria, the rise and fall of the Islamic State, and the return of the Taliban in Afghanistan. Cyber attacks by criminal elements or state actors, and there have been many, many of these, but I'd point out the Bangladesh bank heist, SolarWinds as two of the biggest examples. The rise of cryptocurrency, and closely aligned with that, cryptocurrency fraud. Global inflation, increase in interest rates, and very recently, an old favorite, a banking crisis in the US, which has ultimately led to the demise of one of the oldest financial institutions in Credit Suisse. So these are just the headline issues, and we've faced over the last few years that have impacted capital markets directly and indirectly, and impacted everybody in this room. And we're going to continue to face these risks, or similar ones going forward, and probably completely new ones that we haven't even thought of. So what is the responsibility of the CSDs in monitoring and assessing market stability threats and systemic risks? Do CSDs even recognize these threats in their enterprise risk management frameworks? And are they ready to respond? Are the operational resilience solutions that we have in place and the international regulations and standards, and we heard from CPMI this morning, are they up to the job? Are they fit for purpose, or do they need to evolve? So, to discuss these questions, we have a fantastic panel of risk experts, and we're very honored to have them here today. And I will ask individually for them to introduce themselves, starting with Pierre.
Good afternoon. I'm Pierre-Paul Stacanov. I'm the Chief Risk Officer of ESES, which is the integrated CSD for Belgium, France, and the Netherlands. So Euroclear Belgium, Euroclear France, Euroclear Netherlands. To come back on the earlier presentations, these are 3 separate legal entities, but operating as one on one system, including Target 2 securities. And I'm also here as a chair of the EXDA Risk Management Working Group.
Hello, my name is Ekrem Arikan. Actually, I'm computer engineer, as all of we know. Finance is really very related nowadays, and last year with IT and technology. I worked in Microsoft 8 years, and then worked for Ziraat Bank, which is the biggest governmental bank in Turkey, in the IT side. And then I've been also in insurance company of Ziraat Bank. Then I have been in the first build of energy exchange company in Turkey. And then before coming MKK, I was in Takas Bank, which is the CCP company of Borsa İstanbul Exchange Group. I managed 3 years the CIO position of CCP, and then 4 years ago, I have started in MKK as CEO and board member, which is the CSD and also Trade Depository of Turkey. Thanks.
Looks like Ekrem and I share the same IT background. Cool. I'm head of the executive board of National Depository of Ukraine. And before that, I was a part of investment banking industry in the UK. Pheona.
Thank you. My name is Pheona Härtel, and I am the head of legal risk and compliance, serving the financial markets under Strate Pty Limited, South Africa's principal CSD.
And finally, on the screen, you'll notice we have an extra panelist. Adrien, would you like to introduce yourself?
Sure, I'd be happy to. My name is Adrien Vanderlinden, and I have responsibility for the Systemic Risk Office at DTCC, which is one of the teams within DTCC's risk management division. Just by way of background, the Systemic Risk Office was created a little over 10 years ago in the wake of the Lehman insolvency, and its mandate is to monitor threats to financial stability and to explore ways to address the risks that such threats may present to DTCC and its clients. Thanks so much for having me. I'm very excited to join the panel, even though I'm obviously only participating remotely. Thanks.
Thank you, Adrien. So you can see we have a diverse and very expert panel of risk professionals. But we thought we'd kick things off by asking you, the audience, a question. So if we could have the first polling question, please. And this is a pretty basic question. To what extent should CSDs be involved in monitoring systemic risks in the market? Okay, so it's gone down a little bit, but it looks like the majority believe that CSD should probably have a broader role than maybe they're fulfilling at the moment in monitoring and maybe addressing these systemic risks. Is that something that we think CSDs have traditionally been set up for, and is there a role for them to broaden their role in the market to looking at these wider issues? Pheona, I can see you nodding there. Do you want to comment on that?
I think CSDs obviously play multiple different roles. One role that I will maybe emphasize is, in some instances, they do play the role of a regulator. And as you know, the role of regulators is to monitor risk and respond to it, sometimes proactively, most times reactively, unfortunately. But from a Strate perspective, we do play a role as a regulator, and I think the positioning as a regulator enables you to sort of be neutral in your positioning when you're addressing risks within the environment. It also enables you to have access to information that potentially other regulators do not have, and through those collaborations then find mechanisms that better manage that risk. I think also important to note in terms of that role is the fact that there are interdependencies in the ecosystem, and sometimes you are not able to identify a market player who indirectly potentially impacts the broader ecosystem, but the impact of a risk that materializes in that space has a direct impact. And having that ability to stand back and have a bird's eye view enables a CSD to contribute to those policy-making decisions, as well as to the regulatory landscape that is built to protect and enable and manage systemic risk in that way.
I can maybe add to that, and coming from a risk management background, typically risk management tends to focus on the survival of the own entity. And in the financial industry, banks have been, let's say, stimulated in managing their risks against or towards their clients, their counterparts, their stakeholders, for their own benefit, for their own good, to continue operating and for running their business. And it's quite different for financial market infrastructures. But a lot of the risk management tools that we have at our disposal have been designed for financial institutions and are therefore not easily usable or reusable in the context of a CSD or a broader ecosystem risk.
And just finally on this, Pheona, so you mentioned obviously Strate's dual role as CSD and regulator gives you that kind of privileged position. And I wonder if maybe bring in Adrien, because obviously with DTCC, you're operating the depositories, the CCPs, and do you think that that kind of broader role is essential to give you as an organization the mandate to take a more active role in understanding the systemic risk to the market, which might not be available to a standalone CSD?
Yeah, I think you know, that I was looking at the question, and I think CSDs and by expansion, you know, CCPs and other financial market infrastructures in general really have to focus on both their own exposure to and their contribution to systemic risk. I think that's the only way to make sure that we're managing risk appropriately and that we're operating according to our mandate to safeguard financial stability. I also think it makes sense that authorities look to CSDs and again, more broadly to other FMIs to provide them with data that they can use to get a better sense of pockets where systemic risk might be building up. But that said, I think we should all realize that this is not a trivial exercise because of its sheer complexity and because things can change very quickly in today's market. So you may be lagging behind while you're trying to do this, and by the time you've completed your analysis to properly identify a buildup of systemic risk, it may have already led to a crisis of sorts, and it may be too late already to act preemptively. So I think it's a daunting task, but one that is necessary. And I think Pheona very rightly pointed out the importance of interconnectedness. And that's also where I think, you know, as CSDs, we only see the activity that goes through us or through the CCPs, but that's only part of the picture. Our biggest members are very interconnected. We're very acutely aware of that. They have positions all over the place, and what we might see as a long position in our books may be offset by a short position in another FMI's books that we don't see. And that's where I think, you know, the regulators have the advantage of being able to look across those silos and try and put it all together. But again, easier said than done.
No, good point. Obviously, CSDs being at the center of the ecosystem, having that hub role within the interconnectivity of that ecosystem, having access to that data that they can provide to the regulators or the other organizations that are looking to address these risks. And the role of technology and data extremely important in being able to do that quickly and transparently. Now, if we could have the first slide, please, if you wouldn't mind. Ekrem, I think you were going to talk through the kind of solutions that you're looking at in Turkey.
Okay, thanks. Actually, in my opinion, and actually in our perception, the sentences in the poll question is actually all were really valuable. Our perception is that the first three selections are important, but the third one, it was telling only through providing data to authorities, not only providing. We, in our perception, in Turkey case, we are behaving proactively and trying to produce BI solutions and trigger all authorities and all the markets. And I would like to mention about our perception, how we do manage it. Actually, in Turkey, we are not only CSD, we are also a trade repository. That's why we are collecting lots of data. It has been started in the year 2015 by giving the responsibility from CMA, and the operation has started in Turkey in year 2018 in derivative markets, and it was totally compliant with ESMA directives for T+1. But after that, we have started to collect data customly. I mean, we are working very close with all ministries and authorities, CMA and Ministry of Treasury. It was a new approach to collect as much as possible to collect data T0, and not only for derivatives, also for debt securities. And we built such an infrastructure, and not only, by the way, the derivative data is not only for financial institutions, also non-financial companies are also reporting their transactions with abroad, swap data, swaption, and some other financial transactions. By developing in slide, people can see the trade depository platform EVDO I'm mentioning in that part. And then 2-3 years ago, we started to collect some more data with this responsibility, and CMA described some other data to be able to make us responsible in some new areas to manage systematic risk more effectively, efficiently. We called it Investor Risk Monitoring System. Financial intermediary companies are reporting us margin trading, short selling, and securities lending transactions daily to us. And we are collecting also their credit decisions and investor-based. Daily and monthly, we are collecting thousands of data from all financial institutions. It makes big data pool. If you use BI tools, you can analyze, report, and find some proactive, early alerting mechanisms. So that's actually our approach in this area. That's why I believe that we are very strong to manage systemic risk from all of these point of view, because we have the data and we are in the data age, and digitizing all infrastructures is really valuable, and we are just at the center of all financial ecosystems of our countries. By the way, maybe I can give just some more sentences why I have some other products in below of the slide. We have operating public disclosure platform, which means all listed companies are reporting important information to share, which is shareable and which they must share with the public. Not only listed companies, also fund managers, portfolio managing companies, independent audit companies, and some other pension funds. They're sharing information on PDP. We have started to have also another data platform. It's just to inform people and to increase the financial literacy of the whole ecosystem. We are analyzing some data and share publicly over that platform. Even journalists, researchers, and all folks can see analytical public analysis there, and it makes market more aware about lots of things. Maybe one of the most important thing, which is very important for me, pusula. Pusula means in Turkish compass. Sorry, but I will finish.
Last point, Ekrem.
Last word. Yeah. Pusula means the compass in Turkish. It's a new product which we are working on it. We will be analyzing data, credit data, risk data, with some new data packages, and we will be providing separately as a solution box to financial institutions separately, not public. They will compare themselves with other companies, but anonymly, with peer groups, and they will try to find strategic direction for themselves. For the first, sorry for extending my duration. Yes.
Oh, good, thank you. And I mean, clearly you're doing an awful lot in your market in terms of centralizing and facilitating this kind of data. Oleksii, I know you want to speak, maybe leaving aside what we're going to get into later in terms of operational resiliency, but just your pure CSD hat on, what do you think in terms of the CSD's role in understanding, monitoring, and sort of leading the market in terms of these broader threats and risks?
You know, Jim, I feel answering the question in the poll, based on my experience, the regulator is making decisions based on the reporting being provided by issuers and the custodians. And I feel that sometimes, or probably most of the time, it is way too late to make some decisions. On the contrary, Central Securities Depository has hands-on experience with interacting with the issuers and custodians on a regular basis. And I feel that from my perspective, the right answer to the question in the poll is CSD has a broader role in terms of managing the systemic risks and interacting with the regulator on time in order to prevent some bad events to happen. So acting proactively instead of in a reactive fashion.
Okay, no, speed of data, absolutely critical, as you say. It's too late if the horse has bolted, and it's a day or two later, and you know, that data is pretty worthless. Shall we go to this? I'm just conscious of time. Shall we go to the second polling question, please, if you would? Okay, so thinking more broadly, rather than just the classic kind of financial instability leading to systemic risk, what are the most pressing issues in terms of systemic risk and threats to you in your market at the moment? And you can choose more than one if they've set up the question correctly. If not, then you've got one choice.
Looks like there will be a huge debate.
Cyber. I am actually not very surprised. So at Thomas Murray, we've been looking at risks in infrastructure for 25 years or so. And we have been so concerned about what's been happening in the cyber world. We've actually developed our own kind of threat intelligence solution and are looking at about 3,000 entities in terms of their attack surface and their vulnerabilities. And we look at all the FMIs, and I'm sorry, I'm going into shameless marketing here. But I'd say what's very interesting from a Ukraine-Russia perspective is that we could actually track on the tool the week before the war started, we started to see a lot of activity in the Russian organizations plugging gaps and getting their cyber attacks service secured as much as possible, because clearly they knew what was coming. And then we did see the corollary in Ukraine the week of the attack, and a lot of work being done. And cyber warfare was clearly at the forefront of that conflict. Oleksii, do you want to comment on that?
Yeah, cyber attack is definitely something significant in terms of the aggression we experienced. But the funny thing is, and I probably will be a bit contradictory here, yes, we had multiple, probably weeks of cyber attacks, but they weren't successful so far. So we managed just to close the subnets, the sources of those attacks. Luckily, most of them were from outside the country. So it wasn't so bad so far in terms of cyber attacks. And before this war, I had completely different opinion that as a critical infrastructure of the financial system, we should probably be among the first entities to be attacked and cracked down. The reality is that, yes, there are special software being deployed at Central Securities Depository of Ukraine, but when it comes to the actual outcome, we managed to deal with those threats. And in terms of dealing the risks, our experience is that geopolitical risk is obviously
That's
of
obvious.
the much bigger scale than just cyber attacks, even though it is important, and we are under risk of losing critical data. Thank you.
Pierre, Paul, have you got any comments about that result?
No surprise either. I think cyber is on everybody's mind. At the same time, the broader context can be geopolitical, but can also be criminal. There's diverse causes, and your recap earlier was really interesting, because cyber has been going on now for 10, 20 years as a threat for the financial industry, and we continue getting better at responding to it, and the threat keeps on evolving as well. So we are stuck with something that we will probably never get rid of. So it's clearly something that we need to continue monitoring, and in a broader sense, everything to do with IT risk, not just IT security, but also IT stability, availability, data integrity, which is also evolving in the new world of technology, with cloud services, with multiple types of technology being developed, and layers over layers of DLT, but then distributed finance and other types of new innovations in the financial industry that put the risk universe, let's say, in a more complex daylight.
If we could we have the next slide, please? So, I mean, Pierre Paul, wanted you to just continue in terms of talking us through what you've been working on at the extra level, in terms of systemic risk.
Yeah, so this is a very basic systemic risk dashboard prototype, and it comes back to, it's a bit more selfishly looking at a CSD-centric view. What are the risks we are exposed to, the inbound dimension, and what are the risks we pose to others, and the interrelation between the inbound and outbound dimensions. So typically, as I said, we are organized in terms of risk management to look at risks we are exposed to and how we can manage those and protect us from there. And so manage the vulnerabilities on our side, and typically cyber is one, but also from a financial and operational resilience point of view, we need to ensure we remain resilient even when the ecosystem around us is stressed. We heard earlier today about market volatility and gigantic volumes. It requires resilience to absorb those, and system stability, system robustness to ensure that we fulfill our role as a financial market infrastructure. If not, we end up with either transmitting that stress back to the ecosystem and you get this feedback loop, or in some cases, if our systems are not stable by themselves, we could generate ourselves and pose a risk to the ecosystem. So it's really trying to map the different perspectives of what are the potential indicators that we may be facing something because of either vulnerabilities or stress in the ecosystem or our own vulnerabilities and stress factors. And typically on the stress factors that we could generate ourselves, we end up in the typically operational risk dimensions. What decisions do we take? How robust are our systems? How robust and effective are our operations and controls? That is basically, the whole exercise we did with the EXDA Risk Management Working Group to go around this was confirming some very basic truths, but also trying to crystallize systemic risk at a point, not going the route of operational resilience and disaster recovery or basic business risk. If interest rates go up, everybody pays more on their mortgages, and we have inflation going up, we pay more on salaries. That we tried to discard. We tried really to focus on where were the connecting dots that could lead to a feedback loop with the CSD at the center.
And just commenting about these more macro level risks, I'm wondering whether many CSDs have really recognized and integrated these kinds of threats into their enterprise risk model, because certainly my experience has been that many of those frameworks are built from the ground up, from operational risks and procedures and controls, and they don't really look at the political situation, the legal situation, you know, that kind of macro level. Am I wrong? Has that changed? You know, do CSDs actually recognize these kinds of issues now, and have they integrated them into their thinking?
I think it would be remiss not to integrate into your existing risk management framework for the simple reason of the interconnected nature of CSDs and the broader capital market or whatever system that you utilize in your particular geographical area. To the point around disaster recovery and business continuity, as a chain, you're only as strong as your weakest link. So looking at it from the bottom up does create its own blind spots, and you do need to have that broader context that gives you a narrative around geopolitical risk, your government's policies and what that might do in terms of your execution. But I think more specifically, it's the fact that systemic risk by its very nature is systemic. So you need to look at it top down, but the resolution probably is a bottom up approach given the fact that it's the sum total of the individual components.
I want to add also my opinion for this whole question. Actually, excuse me for sharing also another information about me. As when I started, I told I'm a computer engineer, but I also finished management master degree and PhD, and my PhD thesis was about the digital maturity level and corporate governance maturity level and interaction between them. And I'm telling it just to mention about the output of that academical work. It was saying that beneficial owners are mostly related. If you think about the beneficial owners, it is the most related with the corporate governance maturity and digital maturity. It means vendors, workers, all the ecosystem and customers are more interested in with the corporate governance of any company. I think my comment about what is related with this question, I'm trying to say that actually, if you take the opinion of the whole ecosystem, it seems cyber attacks, kind of digital things are maybe more related with systemic risk, but in my opinion, actually, cyber attacks are even not a reason of the systemic risks. Systemic risks should be much more related with the systemic and complex financial transactions. Market infrastructure, for example, the relation between derivatives and equity market, for example. If you if you cannot manage efficiently the interaction between different markets, or market volatility and geopolitical or political issues, it's more complex things. You can manage technical problems with technical solutions, but systemic risks are more complex and social and financial. In my opinion, it should be even another cause of systemic risk, cyber attacks directly. As I said, it's just a technical problem and you can solve it technically. Okay.
Yeah, and so talking about that sort of interconnectedness and the ability of the CSD to work with its participants and the wider kind of market ecosystem to be able to lead any response to some kind of threat. Are there obstacles in regulation? Are there obstacles in what the mandate of the CSD is and what they are and what they're not allowed to do to be able to respond to those kinds of threats and kind of centralize the response of the market? Can we bring in Adrien? Maybe, Adrien, you've got a comment about that? I'll throw that one to you.
Sure, yeah, I think that's a great question, Jim. I mean, there's always obstacles from all kinds of sides, as you just mentioned. I think, though, in this particular case, one of the biggest hurdles to overcome is to make sure that whatever solution, am I coming through clear?
Yep.
Okay, great. Just checking. That whatever solution you come up with as a CSD, you don't come up with it in a vacuum, and you can't come up with it in a vacuum. So you really need to work with your members. And one example that I would point to, for instance, is obviously cyber threats are top of mind for us as well, and they come in a variety of threats. One, and Pierre Paul mentioned it, is threats to data integrity. You can be brought down. There can be a ransomware attack. You can also have a more insidious variation where everything seems fine on the surface, but there's a data integrity problem that's been introduced somewhere. So in a number of these cases, I mean, DTCC also feels that, as much as we're trying to do to try and prevent such attacks, and I was very fascinated to hear, Oleksii's optimism on, what things can look like in practice. That was encouraging, I thought. But it still continues to be top of mind. If, God forbid, there would be a successful cyber attack, and we were more and more of the mind of saying, it's probably a matter of time. No matter what you do, it could happen. The situation is so asymmetrical. Then what do? You've got bad data. Essentially, the only thing you can do then is roll back to a known good state and try and play back your trades from that point onwards. It's one thing to, and we're working on that, it's one thing as an FMI to develop that kind of capability to roll back to a good state, but it doesn't do you much good if your members can't do the same thing and roll back to the same point in time so that you can rebuild your proper books and records from that point onwards. And that's something that we found, so it's something we continue to work on, but very much with our members, because again, it's something you can't create in a vacuum. And I think that's one example of an obstacle that is sometimes a little bit underappreciated, Jim.
Good, thank you, Adrien. So we'll keep things ticking along. Shall we have the final polling question, please? And this is going to be personal to each and every one of you. So how well do you feel your CSD is prepared for the types of risks that we've been talking about? Be honest. You've not been honest there, come on. 62%? Well, obviously, there's no problem, so we can go home. So let me put this to you, Oleksii, then. How prepared, would you have answered the same thing on February the 21st last year?
Good question. Good question. I wonder how to start this story and to make it.
Would you like the slide up? The slide?
Why not?
Yeah, can we have the slide, please?
Why not? I probably should start, as you mentioned, Jim, with the before-war state. So probably many people knew that something is happening at the border of Ukraine, and CSD was no exception, and we were trying to understand, are we ready for an aggression? And we had some strategic sessions at the executive level. We even prepared a report to our supervisory board in order to say, well, guys, we did this, that, and we think that we're ready, or mostly ready, or at least we did something as a preparation to a potential risk that is shining. The funny thing is that, well, nowadays it is easy to say what war is. I mean, the Ukrainians, they know what is a big war. But at that moment, when we were considering how the aggression would look like, because it depends, right? If something happens in the east of the country, then kind of, well, we continue operating, right? Then if the whole country is unfortunately invaded, then there is no sense in operating at all. So what is war? How to prepare business continuity plan and disaster recovery plan for a war scenario? And it depends on what war is. Luckily, thanks to military forces of Ukraine, I can tell you this story. And for the partners, obviously, at the country level, corporate level, individual level, guys, thank you for supporting my country. So before war, it was unknown what war is, even though we had some experience in the past. And we came to a conclusion, so this is the recipe here. We came to a conclusion that we didn't know what will happen, but senior members of our organization should form some kind of fast reaction squad. So without fast reaction squad, we cannot prepare certain scenarios. Yes, we can prepare some disaster recovery, business continuity, but that will be a huge book of scenarios and the recipes what should be done. So we decided that the future is unknown. We don't even know if there will be an aggression or not, because at that moment of time, well, looks like probably something will happen, but will it? No one knows. So the idea of having a fast reaction squad that comes to the office, if it is still available, was a good idea, because only at the time where something happened, only then we can find out what will be the at least suboptimal reaction to the happening. So that was really good. At the moment of time, on the 24th of February, our senior team reached out the office, and we set up a close communication to our regulator. And so the first phase, let's say, it was found in this fast reaction squad, and that was useful. The second phase is kind of the beginning of the aggression, and this is where, with the cooperation of our regulator, we decided, so the major two things we did was the regulator issued a statement that the market should be closed, no activity at all. And the second thing that they issued and told us to do, and that was actually our recommendation, was to switch off the connections to all the custodians. It may sound weird, but at that moment, we didn't know which territory is occupied and which is not. It means that any custodian could be compromised. And if it is compromised, we shouldn't settle the transactions at all, because that is the risk for the whole system. The shareholder rights should be preserved at any possible cost. So, two things, very good things in my view: stop the market and disconnect the participants, in our case, custodians. The risk that we dealt with, I think, positively was the financial risk. Before this aggression, we decided that we may suffer from the liquidity crunch. We don't know which instruments will be compromised. So we decided that we shouldn't own any, even government debt. And we were full of cash by the beginning of this aggression. And that was very useful, because the next thing that happened was the payment discipline decline. In March 2022, we received something like 30% of what we usually receive from our clients. Can you imagine 30% for a central securities depository, the organization which is not focused on profits? It's a tough situation. It was a tough situation. The payment discipline improved by the second half of the year, but in the first half of the year, luckily, we had enough funds to finance our activities, and that was due to very savvy approach to the finance, to our own capital. Another thing that happened in the middle of the year, we developed a bondholder system that allowed the bond issuers to negotiate the issue parameters with the bondholders. That allowed, in fact, we stimulated in some way our economy, allowing bond issuers and bondholders to talk about restructuring the issues. It wasn't, it didn't have a massive demand, but it allowed some entities to negotiate the issue parameters, and in such a way help a bit to the Ukrainian economy. Another risk we dealt with was personnel. At the moment of aggression, obviously people were trying to leave the most affected areas and the capital of Ukraine as well, Kiev. And then we faced quite an interesting situation. So from legal point of view, for example, our SEC was issuing some decisions related to the manual operations. Obviously, some coupons should be paid. some issues should be handled somehow, and we had to process the issues from the SEC. We had to process some operations our client demanded, but there is no personnel in the office. There is no personnel at all.
Can I ask you about the data, though? Because were you using cloud solution before for the data, or is that something that you put in immediately after?
Oh, yes. This is another story. I probably, I probably can talk a lot about it. So,
let's be mindful of time, though. But.
Sure. So, for the full-scale war, our regulator was saying no cloud solutions are allowed. Obviously, client data in some third place, of course not. But when the war began and missiles were hitting any place in Ukraine, actually major cities, some infrastructural objects, etc., we were allowed to use cloud solution. Why? Because we had 2 data centers, and unfortunately, by the way, your organization was telling us that it's not great. We had 2 data centers in one place in Kiev.
Under normal circumstances, yeah.
Under normal circumstances, yeah. Having in actually one city 2 data centers, it's a big threat for Central Securities Depository that cannot fail at all. Central Securities Depository should continue operating under any circumstances because it's shareholder rights. It's the property that is owned by someone, and we should allow people owning property. So what we did, we agreed with the regulator that probably we should invent something else. What we did is 2 actions. First action, we moved one of our data centers to the western part of the country. And that was a good solution because it is not only the data center, it's the place where people could gather if there is a need for that. And the second solution was the cloud. And the way we made a conclusion how to deal with our IT infrastructure is to use our 2 data centers as a business continuity plan in terms of IT infrastructure, meaning that if missile or something else will happen with one data center, there is another one that should have very similar capacity and that should provide service to our clients. And the cloud solution is something that should be used in terms of in terms of disaster recovery. If both our data centers are hit, there is a third place with the proper data set that should allow us operating even being outside of the country. And I don't think of something else being more or less financially justified and providing similar resilience to us.
Well, it's a remarkable story, obviously, of literally survival. I'm sure that, it's probably opened up discussion in other countries about cloud storage and use of or backup of data on a cross-border basis, which may be something that we need to think about as an industry. We've been given the wrap-up sign, so we are going to have to conclude. We could go on forever, obviously, but thank you very much to all the panelists. Please join me in appreciation.